I wanted to spend a couple minutes talking to the listeners about some of the things they need to be aware of, whether they want to be involved in financing a new construction condo or a single-family new construction. That's a discussion I've had with a number of clients in the past couple of weeks, and I think it's worth spending a few minutes just chatting about some of the challenges associated with that, some of the things they need to be aware of. One of the things is really a lot of the single-family new construction contracts are ones that last probably 6, 8, 10 months. Financing on those, the builders that are building those homes, they want to be able to make sure that the buyer's locked into that particular transaction because they're doing upgrades and they're going over their allowances and whatnot. And so usually the financing date on those transactions are much, much shorter than the actual closing date. The closing date may be 8, 9, 10 months. What advice do you have for clients that want to put offers on new construction single-family homes? Yeah,
listen, it's a little bit of a challenging situation when it comes to the lending side of things because, we operate in around timelines and expired documentation. And typically, our documentation expires after 90 to 120 days.
Right.
So, when you have something that's going to be a 6 to 8 month type of project, there's a couple of times that we need to underwrite that file. Typically, we want to underwrite it up front to make sure that, you qualify as of today and based on your situation today, your employment today, your assets today, your credit score today. What is the property? Is your property even? Can we do an appraisal up front? Now, of course, that appraisal typically there might be just a foundation. So what the appraiser does is he does all the value on plans and specs. Okay, so hey, based on what you're telling me you're going to build here, it will work. But now, again, fast forward to now 120 days later, all your documents are expired. We need to now to re-underwrite that file. We need new pay stubs, W-2s, bank statements, all of that type of thing in order to kind of get you to the home stretch, get you to the finish line. So there's a couple of different steps there. And certainly clients have to be careful that they're not quitting their jobs, right? They're not doing something dumb to get fired. Don't do that because you're in a transaction. Protect your credit. Don't let your credit get pulled. Be really cautious about people stealing your credit identity because, if someone steals your credit and runs up credit card debt or creates you late on some things, it takes a while to sort that stuff out. So you really want to be careful and keep your eye on your finances until you get to the end. The last thing that sometimes can be tricky is the rate lock. So,
right. I mean, the rate lock is only good for, 120 days maybe, max?
No, so different lenders work it differently. So there are a couple of lenders out there that do specialize in long-term rate locks, guaranteed rate being one of them. Like I can do a 240-day rate lock.
Oh, that's great.
Yeah, and so a lot of lenders are really stop around the 90-day mark. And so, so it's really important that you're talking with your loan officer and say, hey, do you specialize in long-term rate locks? So, so I can lock them in. If it's 180 days, I can certainly lock them in. Now, one thing to keep in mind is the rate's probably a little bit higher than if you were to lock in a 30-day or a 60-day rate lock.
Got it. One of the things that I think it's really important for buyers that want to buy new construction, they should add a final appraisal contingency into their offer. The appraisal you're talking about based on plans and specs, that's good and dandy and fine. But you and I know that at the end of when the builders got their occupancy certificate, the appraiser is going to go back and make sure that the actual building was built based on specs and plans.
Yep.
And they'll update that appraisal, right?
And you also want to make sure that, listen, we've seen it. I think it was August of 2006. Right? We hit the peak.
Yeah.
So, September of 2006, the property wasn't worth as much as it was in August.
And the reason we say it's important is because at that point, your contingency for financing has already been gone. So you've waived that. And now your deposit is non-refundable as far as the builder is concerned. So if you have a final appraisal contingency, and let's assume for the sake of argument that there is a market correction that happens over the course of the next 12 to 14 months, and you are in pendency of that contract, at least you have a measure of protection built into your contract.
Yeah. Hey, I want to spend another about 60 seconds here just on what's going on with the Fed. The Fed has released some information around the fact that, hey, it says that they're going to stop reinvesting in mortgage-backed securities in the near future.
They're not really saying they're going to stop reinvesting in mortgage-backed securities. They're saying they're going to slow down,
They're going to temper it. Yep.
They're going to temper, which is huge.
So, they could do it a couple of different ways. They can sell, the 30, their I think $1.7 $7 trillion worth of bonds that they have.
Out of $3 trillion that they have on their books, which is crazy.
Or what they're doing right now is they're not investing more money, but they're taking all their profits every month and rolling it back into buying more mortgage-backed securities.
Spend 30 seconds. How does Fed actually generate that fund? Where does this money come from?
It comes from people paying off their mortgages.
Exactly.
Mortgages, refinancing, that type of thing. So that money is being rolled back in, and they're buying it up. What they're saying is they're going to temper that back even more. But the good thing is the fact that they've decided they're not going to just cold turkey it. Which cold turkey, rates are going up a whole percentage point. I would guess.
Exactly. And the Fed's meeting, I think, June 14th. So there's a couple of weeks. And what's your projection over the course of the next couple of weeks? How the rates are going to handle it?
I would say I'm 70% sure they're going to raise the Fed funds rate by 0.25%. So
All right, you heard it right here.
Anyway, if you're just tuning in.